Good morning, Patricia and Peter. Thank you for giving me the opportunity to present this comprehensive plan for your risk management and estate planning needs. We will focus on how to protect your family's financial future against unforeseen circumstances while ensuring your estate planning aligns with your goals. Let's begin with outlining the key objective of our recommendations. Our recommendations are designed to achieve the three main objectives. One, we will mitigate financial stress from unexpected events such as illness, disability, or death. Two, will secure the financial future of your sons, Bran and Trine, and provide ongoing support for Peter's brother, John. And three, will ensure that your wealth distributions aligns with your current wishes. Will minimize potential disputes and ensure your family's financial security. These objectives form the foundations of the strategies we'll discuss in this session. Let's start with Patricia insurance needs. Based on our need analysis, we recommend the following coverage for Patricia. Life insurance with the sum assured of $1,143,000. Health Inside Insurance. This amount ensures that all debts, including the $500,000 mortgage, $20,000 credit card debt, and $40,000 car loan, are all cleared in the unexpected event. It also provides for your son's education during the school year to university education, and emergency funds equivalent to 3 months of your after-tax salary, approximately $33,000, and living expenses for your family. Next one is the TPD, Total Permanent Disability Insurance. Sum assured of the same $1,143,000 under any occupation definition, and this will be held inside super, plus another TPD worth $400,000 under the own occupation definitions, and that one will be held outside super. The any occupation TPD ensures the coverage if you are unable to work in any job suited to your education, training, or experience. The own occupation TPD will provide additional protections if you are unable to work in your specific role as a business owner, which is critical given your specialized skills and responsibilities at age recruitment. Third insurance policy we recommend is a trauma insurance. Sum assured of $272,000, held outside super. This amount is designed to cover medical expenses and provide income during recovery from critical illness, such as heart attack or cancer. Fourth one is income protection worth $7,738 per month, held outside super, with a 60 days waiting period and a 2 years benefit period. This ensures that household expenses are covered if you are unable to work due to illness or injury. The combination of these policies provides comprehensive protection for you and for your family. Now let's discuss Peter's insurance needs. Based on our analysis, we recommend the following coverage for Peter: life insurance of $332,000 held inside super. This amount ensures that all debts are cleared and that Patricia and the boys are financially secure in the event of Peter's ultimately passing. The TPD insurance of $652,000 held inside super under any occupation definition. This amount covers the potential loss of income and additional costs associated with disability, enable the family to maintain the quality of life. Both life and TPD are linked and held inside super, which result in claiming benefit for one will reduce the total benefit for the whole policy. Therefore, we recommend that policy value will be the value of TPD coverage. Also, combining TPD coverage with life insurance within super will simplify the policy management for Peter. And that's the reason why the value of the policy covering both life and TPD will be $652,000. $200. Third one is a trauma insurance for Peter, also worth $272,000, health outside super. This amount will provide a financial buffer in case of health issue, allowing for treatment and recovery without financial strain. These recommendations ensure that Peter contributes to the family are protected, even in the face of unexpected event. We structure your insurance to balance the benefit of policy health inside and outside superannuation. When policy health inside super, the policy will offer lower premiums and tax-deductible contributions, making them a cost-effective option. However, they have limited coverage options such as the inability to include own occupation TPD. When we recommend outside super, the policies outside super will provide broader coverage options, including own occupation TPD, and also faster access to funds when claims are made. However, the premiums are not tax deductible and cost is generally higher. By combining these approaches, we ensure that you have comprehensive protection tailored to your needs while managing cost effectively. For Patricia, your TPD insurance is split between own occupation and any occupation's definitions to provide comprehensive coverage. Any occupation TPD, this policy health inside super will provide coverage if you are unable to work in any job suited to your education, training, or experience. The main advantage of having any occupation inside super is the affordability, as the premium are lower, and also whole inside super, and the premium is part of the contributions and will be eligible for a lower tax rate, which is about 15% within inside super. However, the claim criteria are stricter, and it may not provide sufficient coverage if you can't return to your specific role as a business owner. Own occupation TPD, this policy health outside super, it provides additional protection if you are unable to work in your specific role. This is particularly important given your specialized skills and responsibility at ACE Recruitment. While it is more expensive and it will be deducted net income or from your net income, it offers broader coverage and ensure you are financially supported if you can't return to your current role. So when we recommend combining two types of TPD insurance, we ensure that you have comprehensive coverage that balance affordability and flexibility. For Patricia, we also recommend an income protection strategy that provides a total monthly benefit of $7,738. This structure allows for immediate coverage from the existing policy within super, while supplementing it with an outside super policy for enhanced coverage. So you keep the current one inside super of $2,500, take another one outside super, and that will make the total combined coverage of $10,238 per month, which is approximately nearly 70% of your current income. The 60-day waiting period is strategic, allow you to utilize your sick leave and saving before benefit begin. And the 2 years benefit period is designed to provide sufficient support during recovery, ensure that your family's financial obligations are met. To align with your current family situation, we recommend updating your wills and power of attorney to ensure that they reflect your current intention. Establishing a guardian plan for Brian and Trent is crucial to ensure that they are cared for by someone who you trust. Updating Peter's binding death nomination to ensure that Patricia receives the super benefit. And we also recommend setting up a testamentary trust to protect your son's inheritance and manage assets until they reach financial maturity. And lastly, a provision for John needs to be included in your estate plan to ensure his ongoing care and support without putting financial pressure on your family. To move forward, we start the application process for the recommended insurance policies. It's essential to engage an estate planning solicitor to update your wills and power of attorney. We need to have a regular monitoring. We'll help you to adjust your plan as your life circumstances might change. Additionally, Patricia coordinates with Amelia, where it will be important to discuss your business insurance needs in details, and that will be discussed in the next meeting. Thank you very much.